Hello traders everyone, and welcome to our new video analysis surfing the Elliott waves. This video has been brought to you by Orbex. Unfortunately, I have to say that this will be our final video, final edition from Wave Traders for Orbex. We have decided, because of different circumstances, to stop the cooperation, but however, I am sure that maybe in 2024 we may look for some other ways of cooperation, but we will not be providing this kind of analysis anymore on a weekly basis like we did it for the last few years or so. So if you were watching our videos for this time, I really want to thank you for giving me this chance to bring to you this analysis, because I really think that Elliott Waves is a unique approach to the market. I still, for the end of the year, for the last video, I still want to give you maybe some of important updates of what may happen in 2024. So far, the swings, the cycles that I've been looking for 2023 are coming together. A lot of pieces are coming together, especially after the recent ECB and Fed policy decisions. So I will give you an update on some of the charts here, the important ones. And firstly, I want to talk about the 10-year US notes. As you know, few weeks back, we talked that this five-wave movement is probably in very late stages. We have seen, based on COT data, that there was extreme of pessimism down there. So based on positioning, I was expecting a recovery. And so far, we can see a very nice and strong reversal. So in my opinion, this is the beginning of this higher degree correction, wave B rally, which obviously could be a little bit tricky. Sometimes could be very simple, like a zigzag, but definitely in both cases, there is plenty of room for more upside here. Also on the opposite side of that, of course, maybe the US yields shows even better picture. Notice that we can clearly count 5 waves up here to a new high, and then a very strong reversal with the price now testing the lower side of this impulse channel. Now, normally when this impulse channel is broken, it's another confirmation that we are in a new corrective phase. But the first confirmation was probably this break below 4.3%. Okay, so it was the previous swing high. So because this one did not hold as a support, I just think that we have to look this as a potential, even if just temporary top, and that more weakness here could be in the cards for an ABC drop. So if we respect the correlations, then obviously dollar could see much more weakness here while we are in a corrective phase here. So I think the dollar index could be headed even below 100. Now also let's take a look maybe on bond market. Why I want to look at the bond market is because, you know, currency pairs are or currencies in general are driven versus US dollar based on rate differentials, right? So it's not important just to track maybe the US yields, but also the bond market and yields in the Europe. So what we are seeing here is actually also a break to the upside. But now the question is where the yields are falling faster. Is this in the US or is this going to be in Germany? Well, keep in mind that Fed has been much more dovish compared to the ECB, which still somehow has this hawkish tone. Okay, so what we are seeing is that US yields could come to the downside much more aggressively compared to the German US yields, but eventually even German US yields, I think, will stay down, because, as you know, each central banks will at some point try to follow what the Fed is doing. So I think that the whole central banks obviously could potentially lead this market into the lower US yields, which on the opposite side of that means that the euro dollar could see more gains. Okay, so as I said, based on the differentials, okay, if the German US yields will come to the downside slower compared to the US yields, then there will be more money, more outflows from the US compared to to Europe. Okay, so it means that the euro dollar could face some more upside here, and it has been the case based on the correlations here in the past. And you can see that we are in the very nice swing zone here. So I think if, as I said, US yields will fall stronger compared to the yields in Europe, I think that this is very supportive for this market. So I think that while the dollar index obviously is trading to the downside, I think that the euro dollar obviously should resume to the upside, and it's also confirmed by this rates analysis. Okay. Now, also another market that is very important for dollar in general are emerging markets. Okay. Now, emerging markets, as you can see here, are on the rise. So we can clearly see very nice impulsive recovery and then a counter trend movement. What is the most important about this movement is that we stopped at the 61.8% and that we completed this wave C of this correction with an ending diagonal. So you can see here this is a wedge pattern, and even if just on a basic technical perspective, these wedge patterns will normally make a very strong reversal in price, and this is exactly what is happening. So it means that money is flowing out of the US abroad to other emerging developing countries. Okay, so that's why we are seeing these emerging markets coming to the upside, obviously because the US yields, because speculators, investors believe that the rates in the US will come to the downside. So you can also see here I have actually this is the dollar index correlated to emerging markets, but what I will do is I will invert this scale. Okay, and you can see now that scale is inverted and that the correlation is pretty tight. So based on the Elliott waves, I just think that emerging markets here are showing a very nice and clear pattern, and that we should see more upside here. And obviously this means that even US dollar, which is here in this orange, should also continue higher, right? So here we have now dollar index wave count. I have been looking for this firstly for the higher degree trends here. I just think that yes, it's still a very big channel, but I think that we have seen this top and that we are headed to the lower side of this channel. Okay, so more weakness here can certainly be the case in 2024. So I'm looking for something similar. Notice that I compared this current whole cycle from 2008 lows to the one that goes back to 1995 to these 2001 highs. But I don't want to make any kind of aggressive big calls. I just want to go and look at the markets as a step-by-step approach. So I'm looking for, at least for this 98 area, I would say, for a retest of the lower side of this trading channel, and then let's see if we can break to the downside to expect more weakness, or maybe even we bounce away from it. But at least, as I said, for the next few months, for 2024, I just think the dollar index will stay in this bearish trend, and also that's the case because of these 5 waves down here on dollar index, followed by this ABC correction. It was an expanded flat, and now we are looking obviously for more weakness here. Also, if dollar will stay on the back foot, and now when we have still somehow unemployment rate very low, I just think, and maybe Fed is approaching the end of this hiking cycle as it showed on the latest meeting. I just think that maybe stocks are going to see more upside in 2024, at least in the first part of that year. Later that year, maybe there could be a big changes coming, especially if maybe there will be some recession fears based on potential delay compared to the US yields that came to the upside pretty fast over the last few months. So I think that this is also something that we have to consider. But nonetheless, looking at the S&P 500 here, I still think that we have a very nice recovery, but I'm just afraid that there will be not that much upside left once we see this 7 swing correction to the upside. So what I'm looking at is the 7 swing move to the upside. Okay, so this can be actually corrective subdivisions, which is fine even if we are moving to a new high, because this can belong to a wave B that is part of a higher degree flat or maybe even triangle here in wave 4 if we'll keep moving sideways after we test a new high. So I'm looking for a break to a new all-time highs, especially after this next wave B pullback. I will be looking for much higher prices, but eventually once we will have these 7 substructures in place, I will be very careful and see what happens. So I think that for the beginning of 2024, and let's say till summer of 2024, that's still potential ongoing bull market for stocks. But then once we reach a new highs here with 7 swings, I just think that we will have to be very careful, especially if at the same time dollar index will try to stabilize somewhere around 97, 98. But till then, still plenty of room for this move to accelerate. Now, also, I think that one of very interesting market for 2024 currency could be Japanese yen. As you know, there's plenty of speculations that Bank of Japan will make changes on their policy rate decisions. So with their policies, and obviously this could bring Japanese yen much higher, especially if we consider that dollar yen is now making a top confirmed by the lower US yield. So based on lower US yields, dollar yen is already cooling to the downside. But now if also Bank of Japan try to fuel this market, it will be even more aggressive drop coming in 2024. So I'm expecting more weakness here, and looking at this whole price action from an Elliott wave perspective, we have seen a completed 5-way price with a double top formation possibly here and a broken channel support. So I think that more weakness can be seen, but of course be aware that maybe wave 2 at some point or wave B could maybe be a little bit more complex higher. But before we see some serious rally here, who knows, maybe we have to retest this 137.60 area first. But overall, I just think the dollar yen could, and yen pairs in general, could see much more weakness in 2024 if Bank of Japan will really change the policy. Now, finally, let's take a look on silver. Now, silver has made a pretty nice move to the upside a few weeks back, but now it's coming back to the range. So even if something dramatic worse happens, I think that still metals could be very attractive on the long side. Maybe not that I'm not that much interested in gold. It's, I mean, in general, metals where they are in uptrend, silver will try to outperform gold. But now when we had this failure spike to a new high, to a new all-time high on gold, which came back below 2000 level, now it's trading around that. There, I just think that maybe it's better to try to focus on this market that has a clearer pattern. So in my opinion, silver is much more attractive and interesting from a pattern perspective. Even if silver, yes, will break to the upside, gold will follow, but based on poor price action, I just like the silver much more here. So what I'm looking at is potential 5 waves up from that 2020 lows, followed by this sideways price action. So this market is very choppy here in a thin range, but you can see that price can be running out of the room here. So I think that sooner or later we will see a breakout, a very powerful one. So these triangles sometimes can provide a break to the downside, sometimes break to the upside. But because we had these 5 waves up from that low, I just assume that maybe in 2024 or maybe 2025, I'm not sure how long this will need to break out, but keep in mind that we are in a wave E. But at some point, whenever we see a break, prices crossing 2630, I just think that bulls could be on track to retest these 2021 highs. Okay, so if something dramatic happens, if inflation is back, if there's a new war or whatever, I just think that metals could be very attractive. And even if in risk-on environment, metals can be attractive. Metals can also be attractive when you have US yields coming to the downside, like in our case. Okay, so traders, again, thank you for watching this video. Let me remind you, this was the final video for end of the week, for the end of the year here, final video for Orbex. So if you're looking for more of our analysis, please make sure to find us on social media, and I will give you more updates each week. Traders, have a good day.